Hello, this is Michael O'Leary from Buy the Book Taxes with another video in my series on IRS collections. If you're enjoying these videos, please hit the subscribe button and the like button. The last video I did was on the 10-year collection statute, which is very important, explaining how the IRS has 10 years to collect balances due from clients. Today's video is on an equally important statute called the Refund Statute. This statute describes how much time a taxpayer has to claim a refund associated with a tax return. It also has an expiration date. It's 3 years. There's two different pieces to what's called the Refund Statute expiration date. The first piece is you have up until 3 years from the due date of a tax return, including extensions, to claim a refund. So for example, take a 2017 tax return. That return was due on April 15th of 2018 without an extension, or October 15th of 2018 with an extension. So add 3 years to those two dates. If you did not file an extension, you had until April 15th of 2021 to submit a tax return and get a refund if you're due one on a 2017 tax return. If you filed an extension, you had or have until October 15th of 2021 to file a 2017 tax return and get your full refund. Without an extension, anything after April 15th of 2021, no refund. With an extension, anything after October 15th of 2021, no refund. There's a second piece to this refund statute called the 2-year rule. So the first one's the 3-year rule. The second one's the 2-year rule. Let's use 2017 as an example. Let's say you've never filed a tax return. Then what the IRS does, because they have all your tax documents, they're going to create a tax return on their own for you. It's called a substitute return, or SFR. And the results are never beneficial to the taxpayer. They're much worse. You're going to get less deductions, less credits, less everything, worse filing status. So let's say the IRS prepares an SFR because they've never heard from you, and there's a balance due on the account, and you don't respond to their letters, so they actually levy your account. Let's say they levy your bank account for $2,000 in August of 2021. You can turn around, submit a return, or even say it's later. Let's say they do it in January of 2022, after the 3-year statutes have expired. So you file a return in January of 2022 for 2017. You can still get some money back, but you can only get back what the IRS has levied from you, taken from you, within the last 2 years. So that's the big difference. It's 3 years from the due date when you're filing a tax return, or it's 2 years from the last date that the IRS took money from you. I'll tell you why the refund statute is so important. There are a lot of people out there in the country who don't file tax returns. They're called non-filers. So I've had clients come into my office and they say, I have to file 6 years of tax returns in one shot. And typically, it's for some other reason. They want to buy a house and get a mortgage. The lender wants to see a tax return. They have a child going to college. They want to apply for financial aid. They need to show tax returns. There's any number of reasons. So they come in and they're going to file 6 years. And in their head, they've kind of figured it out that, oh, well, this is okay. Because for the 3 oldest years, we have $10,000 worth of refunds. And for the 3 newest years, maybe we owe $6 or $7 grand. So when you put everything together, we're going to net $3,000 of refunds. This is great. Then I have to explain to them, no, it doesn't work that way. Guess what? The 3 oldest years are beyond the 3-year statute. So you're not going to get those refunds. The most recent 3, those are within the statute. And guess what? You owe $7,000 for those 3 tax years. So you owe the IRS $7,000 plus interest and penalties and everything else. And, generally people freak out. So let's use a specific example. We're at the end of tax year 2020. So let's look at the last 6. I believe it would be 15, 16, 17, 18, 19, and 20. So 15 and 16 are gone. 17, if you filed an extension, you have 2 more weeks, because I'm recording this on September 30th of 2021. If you did not file an extension for 2017, 17's gone. So 18, 19, and obviously 20 are still within the 3-year statute. For 18, you have until April 15th of 22 without an extension, or October 15th of 22 with an extension. For 19, you have the same thing until 23. And for 20, obviously, you have until 24. So that's how the refund statute works. 3 years from the due date of the filing of the return, including extensions, or the 2-year rule with 2 years from the last time you paid the IRS. I'm going to share my screen here for a second. So you have my contact information. Here I am, Michael O'Leary, Norwalk, Connecticut. There's my cell, fax, email address, website, and here are the services I provide. 1040 tax returns, individual tax returns, 1041s, estate and trust, and then the whole menu of tax resolution options, payment agreements, offer and compromise, not collectible for hardship, innocent spouse, penalty abatements, and all you mortgage lenders, real estate lawyers. I can help you or your clients with tax liens and levies, and I provide CPA quality without CPA prices. If you have years of unfiled tax returns you owe the IRS, or a state you're getting threatening collection letters, please reach out to me. I can help.